So this is Euro USD we are looking at. So I normally come to the daily chart. Okay, remember this is my focal point of starting, finding the direction of the trend, and this is where I normally start. So this is where I want to start looking for the direction of the trend, looking at the moving averages. So if I take a big picture, just a big picture look, I can see that this market has been in an uptrend. Okay, and I believe the vice versa is the same when you look at DXY. So I don't think I'll go into DXY because it will be a bit of repetitive. So I can see this is an uptrend. This is the daily chart. So I can see clear higher highs, higher lows, higher highs, higher lows. So if I can mark them, let me mark them here. Euro USD, paper stone, daily chart. Here, let me mark here. So you can see down here is when we had the break of structure. Okay, what did I write here? Okay, just need this starting here. Okay, so market came, broke structure. So you can see before was lower low, lower high, lower low, lower high, lower low, lower high, failed to create a new low. So we can mark that here. Failed to create a new low. What happened? Market came, got structure here, then we broke structure. And remember, I always tell you guys this, Nico, sure if you've watched my videos, come for my sessions a lot, structure is normally confirmed not only by rejection, but also a strong breakout. So you see this strong breakout is also a confirmation that this level has been wiped out and market has turned into an uptrend. And then when you normally get a good breakout, what you normally want to see following that is a what I call a successful follow through. It's the same thing. If you've watched my videos, I normally talk about this. And remember, this is on a daily chart. So this is a daily break. This is a daily follow through. Markets continued, as in it affirmed that that direction has changed to the upside. Okay. So if you continue marking, okay, here, higher high, higher low here. Okay. Higher low here, higher low here. Okay, so my most previous higher low is here. Okay, so if I draw a support line, unless this level is broken, taken out, I'm still more or less bullish on this pair. Okay, you can see on a bigger picture. Okay, short term, you can see since mid of September we've been in a downtrend. So for almost 1 month this market has been in a downtrend, but still I want to continue looking for buys on this one. Okay, the question normally is, where is a good place to buy? That's where people go wrong. Okay, because look, trading is all about finding turning points. If you can be able to know where market is about to turn, that's all we need to know. Okay, if it's in an uptrend, you want to look for those corrections on the downside. You want to know here, you want to know here, you want to know here. Question number 2, another thing that I find people struggling a lot is how to know which one is a correction and which one is not. Like, why take this level instead of this level? So someone can come here and say this was a higher low, okay, and market broke structure and has gone to the downside. Why wouldn't I take that as that level? So normally for me, I count, especially when it comes to currencies, I normally use Fibonacci to get to know that a level has gotten to a turning point, a true correction. It has formed a true correction, not just a easy correction yenye inaweza kupatia false. So I normally use Fibonacci. So if I come here, I take this whole as my impulse. So normally when you're trend following, you always have to know your preceding impulsive move. You need to know how to define it, which will help you define the correction. If you cannot define the impulse, you cannot define the correction. Okay, so if I take this whole as my impulse, starting here now using Fibonacci and coming here and extrapolate this. Now let me take 50, 61. Okay, now for me, most of my corrections, I'll affirm that a market has done a correction, a full correction, when market has reached nothing less than the 50%. I've talked about this before, but let me talk about it again. If market hasn't reached 50% correction, meaning this impulse has not been corrected 50%. Market has to come 50% in terms of correction, 50% of that impulsive move to the downside if it's in an uptrend. Okay, that's for me how I define a good correction. So tunaona hii hapa, I won't really define this as a clear correction. Okay, because market hasn't reached my minimum level of where I can define this is a good correction. So hapa kuna kuangana false buys, people wanna buy inapanda tena inashuka, wanna stop you out, or people start thinking market has changed direction, which in reality it has not yet done. Okay, so now if I come and establish this whole as my impulse here on a daily chart, taking this as my starting point, this as my impulse there, you can see where market is currently trading. We're at very good correction levels. Okay, market is starting to trade around the 50, which broke. So normally for me, I normally come and remove this. So different charts, I'll have it differently. Since it's broken the 50 and going to the 61, I'll remove the 50. Okay, back in ISO, back in a 61 at 78.6. Why? Because market could hold here, or market could move further here and hold. Okay, so for me, this is a good correction on a daily chart. So now let me remove that. Now I want to look at key levels. Okay, key levels. I want to come look at this level. So this was a support level. Now achana na hii level hapa ni ya BOS. So mnajuanga vile nasemanga BOS ya break of structure. I'll only consider this is the level I'm watching, and I can come and put a text here and it can be let's do some settings here. Let's put it on the left, no, on the right side and on the bottom. Okay, and I write here BOS, and I can put it bold. Let's put it in black. Okay, maybe I can even say this is my BOS level. So BOS level. So this is the level I'm watching, which if market breaks this level, ikiendelea kuanguka, then I'll be looking for more. Market more or less will have turned into a bear market. But since we're still here, now I'm looking at this support. This was a previous resistance, broke, became support. You can see market broke it to the upside, came back up, acted as a support. Now market has come back to that level. So you always want to look at level of interest where people are paying a lot of attention to. Now what happened here? This is very good information, especially on the daily chart, and you want to pay attention to this. What happened when markets came here is that markets broke. Now this, on the other hand, what happened next is what we call now, you remember I showed you the previous one was a successful follow through. This is a failed follow through. Okay, this is a failed follow through. So failed, why? Because market broke strongly, which is a good confirmation, but you always want to confirm that. And what happened immediately? So let's say, for example, you were short this market and market broke here, it was a very good sign. But when market immediately broke back above the next day, it's a bad sign if you are short on this pair. And if you're looking to go long, this is very good information. What happened the next day again? Markets broke to the downside and then had another bullish engulfing back to the upside, and you're now starting to see a little bit of follow through. So this level of interest, this key level, is holding markets to the downside. Market is failing to break to the downside. So this is good sign for bullish players. Okay, to show on in terms of Fibonacci, market is playing around the most interested level, the 61.8 golden level. Okay, then if I come further now look at patterns, I can now sort of see this is a big picture flag pattern here. Okay, big picture. I don't look for flags mainly on the daily chart, because if you get a flag on the daily chart, this is a flag that is going to take you a couple of days to materialize. Okay, so for me, I'm normally looking for flags mainly on the 4-hour chart. So this one for me is a very big flag that I don't really look to trade, but sometimes depending if everything is aligned, it's also a very good opportunity to trade it. Okay, so market is trading down here, so starting to have bullish trend. And now if I go to the 4-hour, and before I go to the 4-hour, back here, you want to look at here market also back on moving average. So me, I use a lot of stuff. I can see the same ideology. Market is sort of trading a little bit below the 50 EMA. Okay, sort of what was happening here, which is still a really good buy level. Okay, when market starts really going towards this level is where you want to start staying out of the market. But as long as you are here, you can see here market broke slightly below, went up. Sometimes market will just act as that. It will act as a dynamic support like this here, where market will just touch here, then go up. And if you see here also on the daily chart, it's sort of on a flag pattern, sort of. You see that? Okay, this is a big picture flag, and that is what I'm saying. I can only confirm that this is a flag because of this previous impulse. You see this previous impulse, it's what affirms me that this is a correction and a flag. But if this impulse wasn't well defined, then I can't come and start drawing flags. Okay, and you can see how this went up. Now you can see, now what I was saying, why it takes long on the daily chart. Look, for example, upper entry was on which day? May 12th, for example. Now target, if you're looking at the previous high, ilifikiwa June 12th. So it took a whole 1 month. Now if you have the guts to hold the markets for a month, me I do. Me I can hold for a very long time. But if you don't, then this is not something that is well catered for you. So if you don't have that capacity. But for me, this normally works hand in hand, because sometimes, look at this, if you bought down here, look how markets shot all the way here. So you're having a few good days, then look how markets went back down here. It almost went back to your entry. Most people don't have the guts to hold within that level. And then after that, you're seeing now markets shot to the upside, it can the target, but it still took a whole month. Okay, so same thing here. Okay, same thing here, sort of like that. So same thing here, still a very good bullish buy. So same pattern. Okay, now back here, looking at the 4-hour chart, now you're seeing a little bit much better confirmation in terms of structure. So you see here last week, now I normally come here to look at pivot points also on the 4-hour chart. Now for me, I always use 3 pivot points: the last 2-week pivot points and the current week pivot points. So I always have the last, that's on the 4-hour chart. If I come to the daily chart, I'm normally looking at the last 2 months pivot points and the current monthly pivot point. I remember I was talking to one of you guys, Chris, who's here, and I was telling Chris, when market is in an uptrend, we rarely see markets coming really close to the S3 on the daily chart. Okay, if market starts coming really close to the S3 on the daily chart using pivot points, there's a high chance market is in a bear market. But as long as we're slightly below P and trading around P, market is normally trading in an uptrend. So when market is trading in an uptrend, you do not want your pivot points. Okay, you don't want to see your daily pivot points trading at around S3. There's a high chance market is changing direction. So if I extrapolate this, if I take more charts, let's go to maybe the last 30. Okay, if I add more here, now if you look at this uptrend, you can see market is not really coming close to S3. So there's S3 here, S3. You're seeing market is not trading within this zone. Okay, it's not trading within this zone. That's why here even there's a high chance, there's also a high chance that market could be starting to come or finishing the bullish trend, because as market starts finishing a bullish trend, you start seeing weaker and weaker impulses to the upside. Market bullish trend ilianza huku. So people who are also looking to buy around here, you're sort of a little bit late into the party. Okay, you're starting to enter the markets. Ni kama hapa mtu alianza kuona hii downtrend hapa chini ndo anaanza kununua, is or starting to sell is when market has already started changing direction. Okay, and that's the same thing you're seeing here. When market was in a downtrend, look at the R3s. No, R3 hazifikii. Okay, but when market started coming back closer to R3 with those strong impulses, then it was a very good information that markets inaanza to change direction. So same thing here. Now that market is starting to come closer, as much as we're still looking for bullish plays because market hasn't broken structure, it is important for you to pay attention, to be quite risk cautious, not to take too much risk, not to scale in too fast as compared to when it was down here. Okay, these are times when market, if it changes direction, it is even better to start looking for sales. But still, all in all, market is still good structure to a bullish trend. Sawa. But I hope you get my point. So I have those both views. Still looking at structure to the upside, but still very cautious that market is starting to near S3, which is a sign. Here we've already started breaking. We broke below the moving average a second time. Okay, normally you want to see markets trading above the moving average. Here, the 50 EMA. We got this first one, markets went up, and now you can also see this previous impulse. Look at this impulse. It is not as strong. Okay, it is not as strong as this previous impulses. Okay, so it's not as strong. So you should also be a little bit wary of that. So, And back to the 4-hour chart. And remember, guys, I don't go lower than the 4-hour chart, so I won't go to the 1 hour to explain what is happening there. But still, the 4-hour chart here giving some good impulse buyers, some entries to the upside, looking at that supportively may hold, markets closing above the key level. So as long as we are above, so my first number one sign, as long as market remains above this key level, you can start looking for buys. Okay, around here. Okay, I'd suggest you have a tight stop loss around here, just below this level, because if market starts breaking further below this level, trust me, there's a high chance market itaanza kwenda in a downtrend. Okay, but as long as we're above this support level, this one that we've just broken above, this one, okay, then I believe markets could continue moving to the upside. So